Getting to the first $100,000 in your investment portfolio is the hardest, especially for anyone starting their account with nothing. If you only had $10,000 to invest, you would need to multiply it by 10 times or get 900% in gains to get to $100,000. People typically don't get these kind of gains quickly unless they perfectly buy something like Tesla at the bottom and successfully sell it at the top without panicking on the way there. If you think about it, going from $10,000 to $100,000 is equally as hard as going from $100,000 to $1 million with only investment gains. It's still a 10 times difference between them. But let me tell you that getting to $100,000 is doable, and once you get there, making money becomes much easier. First, let me quickly tell you what $100,000 means in terms of easier money. You can theoretically invest all of it into a simple dividend paying idea, like TD Bank for example, who as of today is paying a 5% dividend yield. That means on $100,000 you can expect $5,000 in absolutely passive dividend income over the next 12 months without even touching your investment. $5,000 per year is the same as $417 per month. That's as good as what a lot of rental property owners are able to collect in cash after paying all the regular expenses and without considering all the potential risks that happen to run the business. So a lot of people striving to get to $100,000 often think that through whatever investment strategy they're doing, be it through dividends or high growth stocks or maybe even gambles, as long as they're getting higher gains of their portfolio, then that's all it takes. But the fastest way to get to $100,000 without taking unnecessary risks is actually through simple lifestyle choices, not awesome investment gains. And as strange of an answer that is, let me show you the money. Let's say your investment portfolio is $10,000, which is what the average Canadian has in their investment account. The average return expected in the stock market is 7%. So in 1 year, the average portfolio is expected to make $700. That's not bad, but it's not an amount that's really going to change your life. But maybe just enough to cover your mobile phone bill for a year unless you have an unlimited plan. Let's talk about lifestyle choices. Perhaps you find a place to live that's $200 per month cheaper. You cut back on eating restaurant food, that saves another $100 per month. And you spend less every month on random stuff you might buy, that saves another $100 per month. So in total for a whole month, you would save $400, which means that doing this for a whole year, you would end up saving $4,800. This is so much more money than relying on stock market gains, and it was so much easier to do. Well, in reality, the stock market gains are riskier and aren't guaranteed every year, whereas lifestyle is just a choice between spending and saving. So if you're someone with a $10,000 portfolio that grows 7% every year on average, to get to $100,000, it would take you around 34 years. Well, people don't have the time or patience to wait that long. But if on the side you decide to save $400 per month on lifestyle choices and invested those savings right away, then the time it takes to get to $100,000 is amazingly reduced to just 11 years. But our example only talks about if you did small lifestyle changes. If you want to be a bit more aggressive and save $800 per month instead of $400, then it would only take you 7 years to get to $100,000. If you were even more aggressive and found ways to save $1,200 per month, then it would only take you 5 years to get there. It's not easy to find savings at these amounts, but it's possible. Or you could always supplement it with additional money you earn, like salary raises and promotions, or reinvesting the dividend income you receive throughout your journey. But recall that it would take a long 34 years with average returns to get from $10,000 to $100,000 by only investing. If you also added your $1,200 per month in savings to invest, and instead of just the 5 years it would take to get to $100,000, we fast forward and let it run for 10 years. Your initial $10,000 portfolio would grow to $225,000. Fast forward to 20 years, it would be $648,000. And fast forward matching at 34 years, it would grow to $2,005,000. You would have dramatically surpassed your target of $100,000 over the same time period. At each of these portfolio values, a 5% dividend investment gets you some pretty sweet passive income every year. Notice how with a $2 million portfolio, you could be getting $100,000 per year in passive income without even touching your investments. Here's the annual amounts but on a monthly basis. Well, everyone has different numbers to work with, so I've left a link in the description for the investment calculator that I use. Inside you could put your own portfolio numbers and investment growth expectations. Then you can calculate to see how much you can expect in your portfolio at the end. So be sure to check it out and see how your portfolio growth might be like after making some lifestyle choices. But more important than playing these numbers and celebrating too quickly is actually being able to commit to all of this for many years. From actually doing the lifestyle changes, transferring those savings every month to your investment account, and deploying the money in investments to work for you. The moment you don't do anything about it or just stop, then it just doesn't work for you. Depending on your platform, you can schedule recurring bill payments from your bank account to your investment account. I like to sync the timing to whenever I receive income. This way you can automate the contributions to your portfolio and make sure that this kind of investment growth is working for you. Here's a quick quote from Charlie Munger, or Warren Buffett's partner, on getting to your first $100,000. The first $100,000 is a bitch, but you gotta do it. I don't care what you have to do. If it means walking everywhere and not eating anything that wasn't purchased with a coupon, find a way to get your hands on $100,000. After that, you can ease off the gas a little bit. So in the video, I used average investment growth. Now, if you're looking for strategic results that are more worry-free, defensive, and faster growing over long periods of time, check out this follow-up video after called the all-weather investment strategy. Our examples use a 7% average growth rate and produce these investment amounts over time. Using an 8.5% growth rate that the all-weather strategy has been returning would have produced these amounts over time and improved your results so much more. So that's all for now. If you enjoyed what I had to say or learned something new, remember to like this video and subscribe if you haven't already. Turn on the bell icon to get notifications of these money-making ideas as soon as possible. Let me know in the comments below any lifestyle choices or money-saving strategies that you use, and I'll see you next time.